My name is Gaurav Bansal, and we are going to start this new series on economic survey where our focus will be to capture the key theme of the economic survey, what the economic advisor really want us to know about the developments in the economy, and what are the major challenges, what are the major themes that we have seen apart from the major developments and the key datas. So the first lesson or the first key takeaway from the economic survey that economic advisor want us to take is regarding the challenges. The survey very clearly highlights the challenges that have been ahead for us. This year was the year of challenges. Already there was a pandemic. We know because of pandemic the economy was already in tough situation. Our debt levels were very high. Okay, we have already taken a lot of loan. We already had a lot of pressure to repay those loans, and in an environment where the economies in our neighborhood were going into debt crisis, like Sri Lanka, like the origin place of the terrorism. Okay, so these kind of countries, when they were going into debt crisis, India also in a way feels threatened, because when your neighbors go down one by one, even though you do not compare to them, still it creates a kind of uneasiness. And economic downturn is not a good thing in your neighborhood. Okay, even though we do not have much of trade relations, even though South Asia is one of the least integrated places in the world, yet all of this matters to some extent. So the survey highlights that this year already there was pandemic issues, there was supply chain issues, already inflation was high. On top of that, the next problem that came forward was the Russia-Ukraine war. The Russia-Ukraine war immediately increased the food prices, fertilizer prices, and the fuel prices. Three major inflation is it created into the global economy. As a result, it affected not only the emerging market economies, it also affected the markets in Europe, it affected the markets in the developed world. And as a result, those countries experienced inflation that they have not seen in last 50 years. The Europe, USA had very, very high inflation. As a result, what they did was the natural response by increasing the interest rates. So I hope my students are aware that when the inflation rises, we try to cut the demand. And in order to cut the demand, we want to cut the interest rates. We want to cut the lending. And for that, we increase the interest rate. My bad, I said it otherwise earlier. So why do we want to cut demand? Because essentially it is demand which is leading to more demand for the resources and creating the inflation. So when demand is high, prices they tend to be higher. So some of the basic economics understanding is required. So I hope you understand the basic demand and supply. You understand the basics of economics regarding the micro and macro, so that you can understand these basic concepts. So the point is already there was a pandemic hangover in the form of supply chain issues, high prices. On top of that, the war in Ukraine affected the food prices, fertilizer prices, and the fuel prices. And these affect not only the emerging market economies as it usually happens, but it even affected the advanced economies. As a result, everywhere they experienced inflation that they've not seen in last 50 years. The natural response was to increase the interest rates. When interest rates are higher, it becomes more expensive to take loans, and less companies take loans, and less people take loan for their houses, for their cars, etc. And this slows down the demand for a while until economies can take a breath and identify the sources of inflation. So that is the normal course every country has to take. Now, when there was monetary policy tightening in USA and Europe, the USA increased the interest rates to almost 4.5% from a level of 0.25%. You can think about it. It's almost like they increased their interest rates almost 18 times. 18 times. Think about it. Okay. And when US will offer you interest rates around 4.5%, you can think about it. It's one of the highest interest rates on one of the safest bond in the world. As a result, the money, not only from the emerging markets, but even from the Europe, even from Japan, went to the USA. So that was the impact. Okay. And what will happen when from all other countries money is coming out and it is going to USA? In all those countries, their currencies fell down significantly. Okay, American dollar increased very, very significantly, and other currencies fell. Rupee also fell against dollar. And what is the impact of that? All the products that we import are now going to be more expensive. Rupee has fallen on an average by 9% against the US dollar last year. That means all the products we import are automatically higher 9%. So this was the first impact of the depreciation of the currency. Okay. So we had imported inflation situation, we had currency outflow, and we also had very high interest rates. Because now, in order to keep some currency here, we also have to offer higher interest rates. Think about it. USA bond is one of the safest investment in the world. And when USA is giving you guaranteed 4.5%, you, a country which is relatively poor bond rating, definitely has to offer somewhat higher. So we also had to offer almost like 6 to 7%, while we were earlier offering 5.5%. So we also had to offer higher. That means for government, borrowing will become more expensive. And as a result, borrowing became very expensive. The cost of government borrowing also increased. All that I'm talking about regarding that, there are notes, and in the description and also in the first comment, you will find the link for the notes. Now you can understand these were the major challenges that we faced in the first half of the year. What are these? Let me summarize again. First, we had pandemic. Okay, pandemic was already there. It's not new which happened this year. Pandemic by now had limited impact, but still it had impact on supply chain. It kept the key prices or certain key inputs more expensive. On top of that, when Russia launched war in Ukraine, that had a major impact after that. And that increased the fuel prices, food prices, and fertilizer prices. This also increased the interest rates in USA. This led to the currency outflow from India and many other countries, which led to fall in value of our currency. So as a whole, this year, in the first half, our currency declined. We had to face massive inflation. At the same time, our import bill increased. At the same time, government borrowing cost increased. So all of this is not a good development. All of this is macroeconomically very unstabilizing or unstabling developments. So given this was a major challenge for Indian economy. In the second half, the China played too much with the zero COVID policy, and the zero COVID policy then played with China. And China had a massive crisis in the second half of the 2022. And China had a full-blown crisis, which has once again disrupted the supply chain now. So these are the developments in 2022 globally. Now, after these developments, the survey highlights that there is some silver lining. There is something which is positive, which we can look forward to. And what is this positive? The positive over here is the USA and Europe. It was expected 6 months ago that USA and Europe will enter a long winter. A long winter is an allegory, or it's a adjective that we use for a recession. Okay. So it's like using an upma alankar, in case you understand from the Hindi Vyakran. So USA and Europe, they avoided recession. We were expecting that they will go into a long recession, but they avoided this recession and they performed better than expected. The inflation over there has now moderated. The European currency has now re-strengthened itself. Okay. Now, when inflation has come relatively under control, when economic performance has also come to, let us say, a bit of recovery stage, then we now have a major development that we are now hoping very positively regarding the, just a second please. So we are now very positively hoping for the revival of the trade and the standard economic ties. Regardingly, accordingly, the demand is picking up world over, except a few countries like China, Brazil, Pakistan, Sri Lanka, etc. Similarly, the shipping cost, which can be assessed by the Baltic Dry Index, that has also fallen down, which is also a very positive sign. The higher shipping cost was also a major problem globally. Now, globally, there are three major signs that we can look forward to. What are these? Shipping costs have fallen. The USA and Europe performed better than expected. They have not gone into recession, which we expected. And the trade is likely to revive in a better way. Now, we have discussed the challenges globally. We have also discussed after that what has been the silver lining, a positive ray of hope globally. Now, let's talk about India. So, if we talk about India, the economic survey highlights that India will cross $3.5 trillion this year. This will be a key landmark for India before the $5 trillion economic level. Then our growth is expected to be about 7% in this financial year when it completes in March 2023. The inflation has come down considerably now and is below 6%. It's around 5 to 6%. And when we say inflation, CPI, the Consumer Price Index, is our official benchmark. One more positive development is the CPI and WPI, they are now very close to each other, and it is also a very positive signal. Generally, when WPI and CPI are not close to each other, they have a gap that shows that something is wrong regarding the two types of market, the factor markets and the product markets. WPI reflects the product market inflation, whereas CPI reflects the product market inflation. I will repeat, WPI reflects the factor market inflation, means how much wages are rising, how much interest rates are rising, how much rent are rising, basically how much cost of production is increasing. That is measured by WPI. So that measures supply side inflation. Okay. The factor market inflation, whereas CPI measures the product market inflation. So that is a key difference between CPI and WPI. And when these are close to each other, that means our product and factor markets are in sync with each other, which is also a very, very positive sign. As a next development, RBI, since inflation is under control, the RBI can focus on the rate cuts. The RBI can support more development and growth in future. Then forex reserves, although it was a very tough year, but forex reserves for India are resilient. We are roughly at the same level where we were at the beginning of year, despite the fact our imports have increased considerably, our current account deficit has increased. Okay, our currency has taken a hit, and a lot of dollars went to USA. So given all of this, there was a major challenge regarding the availability of forex in the country. So despite a tough year, we have been able to maintain our forex levels. That shows how tough is Indian economy these days. The balance sheet, a very, very positive sign right now is that the balance sheet in the banking sector and the private corporations is much more cleaner. Means the debt levels are falling, the companies are in a better positions, their profits are increasing, their asset quality is improving. Okay. So all of these are very good signs for a positive business cycle coming up ahead. And now we can say the bad business cycle that we have been facing for almost a decade is now over, and we are once again at a virtuous cycle. What is a virtuous cycle? A virtuous cycle is where whatever you do leads to a positive feedback loop. Means government increases the demand in the economy by spending more. Since there is more demand in the economy, the private sector is also encouraged to produce more. Since private sector is encouraged to produce more, it will hire more and more people, it will increase the jobs and also the demand in the economy. More demand brings more investment, so sometimes this can become a very positive feedback loop which can give a boost to any economy. So this is what we expect Indian economy to go into from now onwards. Now, these are some of the major developments regarding the overall business cycle, the corporate balance sheets, the business cycle challenge, okay, the forex challenges, the inflation challenge. So all of these are broader long-term cycles. Now let us talk about some of the short-term numbers, the current numbers. Okay, data regarding taxation, for example. So now we can say GST is very reliable and dependable tax source. We can rely upon it, and it's also giving us very healthy revenues. So that is also a very, very positive development for India, because a country which can rely upon its taxes, that its taxes will stay intact depending upon its economic activity and will not be affected very badly by the global development, it is a very positive sign. So fortunately, that is something that is happening for India now. Okay. Now, since we have discussed all of this, let us talk about the debt levels. Debt means how much loans overall we have taken. So generally we talk about the government debt. The government debt in India is around 82%, which is on a higher side, but this has increased because of COVID as well. India was managing its debt around 68-67% in 2018. But since 2018, the debt levels have grown considerably. Okay. Partially due to bad performance of the GST in the beginning. When GST was a new tax, it was not performing very well and we had some challenges. Okay. And now let us talk about the current debt levels in the other areas. We have talked about the government debt levels, and I've said that it has increased from 2018, but largely because of some of the issues like underperformance of GST, like the COVID crisis, and these issues are over. GST is now a dependable and reliable tax source. So, getting back to the debt levels, let us talk about the household debt. The household debt in India is considerably low. The household debt level in India is only about 36%. The corporate debt levels in India are only about 88%. Overall private sector. When I'm saying corporate sector, it doesn't mean only the big companies. So private sector debt is 88% of GDP. The household debt is 36% of GDP. And government debt is 82% of GDP. Okay. And it is said that overall debt levels in India, they are roughly 170% of the GDP, which is one of the lowest in the world for any major economy. India's debt is almost two-thirds of the average global level. The global average debt, we are talking about total household, private, government. If we combine all of that, the global average is 250% of GDP, while India is performing at 170% of GDP. So you can see there is a considerable difference. India is doing much better here. And there is something which is very, very positive. India is the only country in the world, only major country in the world which has been able to reduce its overall debt level since 2008. In last 15 years, India is only country in the G20 group, in OECD group, or whatever major market groups you can talk about, is the only country which has been able to reduce its overall debt. If I have to compare, then China's overall debt level are around 300%. French overall debt level are about 350%. Italy, this number is 260. Japan, it is 425. While India is 170. Okay. So that is the development. One more thing in this video that I've noticed, and it is a bit irritating for me also, and I think it creates some issue, and that is notification sounds from my tablet. I'll find a solution to it, and I make sure in the next video that's just not bothering me, because every time it takes my attention away. This is the first time I'm doing video in this format, so I didn't realize it will be a major problem today. And most of these are messages by the students, those who are sending replies in the Telegram group right now. So I'll make sure that next time notification sounds are not there. So I'll go back once again to what I was talking about. I was talking about that India is the only country which has been able to reduce its overall debt level, and is a country which has one of the lowest debt levels in the world, which is a very, very positive development. Okay. So this is what the economic advisor has written in his letter, and which captures the broader theme of the survey. The chapter 1 also repeats the similar story, maybe a bit more with more datas. Okay. So far what I was talking about was the theme of the economic survey. What are the challenges? What are the positive side in the global economy now, and how India is poised to take over those challenges. Now, in the chapter number 1 of economic survey, there are certain terms that are mentioned. Those terms are mentioned in the context of the major economic challenges that have been there for the world. So the chapter number first of all, highlights all the major economic challenges the world has experienced in the last 100 years. And it starts with the First World War. All of us know about First World War and how the war can be a major economic challenge. We now also know due to the Russia-Ukraine war. So this is not something for which we really have to go in depth and understand. So war was a major disruption. After war, there was outbreak of Spanish flu, okay, which was very similar to what we had in the form of COVID after almost a century. As soon as the Spanish flu outbreak was over, the USA had Great Depression, when the US stock market completely collapsed and it faced challenges. And after that, the next major challenge was faced in the form of the Second World War. And after the Second World War, we created a new world order, and we created certain agencies like IMF, the World Bank, etc., which will reduce the chances of such crisis. But unfortunately, still, almost every 15-20 years, we consistently face the challenges. The next major crisis the world faced was in 1970 in the form of oil crisis. What was the oil crisis or the oil shock? In 1973, the OPEC was created, oil producing and exporting countries. It is a consortium of countries. It is a group of countries which can be called a cartel. This cartel, when it was created, increased the oil prices almost 700% overnight. The oil prices used to be about $3 per barrel, okay, somewhere around 1970. And in 1973, before OPEC was created, they were around $5 per barrel. The day OPEC was created, the oil prices increased to $7 per barrel. But the very next day, OPEC increased the prices to $35 per barrel. That was almost 5 times increase in already high price. So oil prices increased so much that every economy in the world had a challenge and crisis. And this is when USA last time experienced the double-digit inflation. So these oil crises, first in 1973 and next in 1978, were the major challenges that we had to face. So these were the two oil shocks which affected the global economy very badly. After these oil shocks, and partly because of these oil shocks, we had in 1980s the debt crisis of Latin America. The Latin American countries which were doing considerably well, countries like Mexico, countries like Argentina, countries like Brazil, they suddenly slipped on their economic performance and they started performing very badly. And that was one of the major challenge. So next challenge after the Second World War was the oil crisis and the debt crisis. After these debt crises, next we had a crisis in 1997 in the form of Asian currency crisis. So the Southeast Asian countries, they started having problem regarding the currency outflow. And Southeast Asia is a well integrated region like European Union. Okay, it is a common market, and hence if one country has a major crisis, all the other neighbors are also likely to have the similar crisis. Soon this crisis covered almost entire East Asia and also engulfed Hong Kong, Korea, Japan, etc. For many of the countries, it reduced their GDP into half. This was a very massive crisis which was in the late 90s in the East Asia. India, since it was not very well integrated with the world, it almost escaped the crisis. So that was the last crisis in the 20th century. And since then, we have crisis in the 21st century. So the first major crisis in the 21st century that we experienced was the subprime crisis, which we also call global financial crisis, which started in the American banking system in 2007. By 2008, this crisis was very clearly visible. And when the Lehman Brothers, which was a major bank in USA, that fell, that collapsed. And then there was bloodbath, a mayhem on the American stock market and global stock markets also, because they are now very closely integrated to each other. So this was the global financial crisis which kept the entire world in its grip for the next 4 years. By 2012 only, we started to come out of this crisis bit by bit. But then the world experienced the next crisis, which was specific to the developing countries throughout the world. When America increased their interest rates after the recovery of country, we experienced something known as taper tantrum. A taper tantrum is a situation in which whenever USA increases its domestic interest rates, world over, all the investors shift their money to USA. They withdraw their money from other markets and they shift their money to the USA. So that is a major challenge for other countries. This outflow is so massive. Okay, लोग क्या करते हैं, बाकी कंट्रीज से अपना पैसा बाहर निकालते हैं और उस सारे पैसे को अमेरिका के बॉन्ड्स मार्केट में लगा देते हैं. This amount is so massive that there is currency depreciation. There is currency crisis in rest of the world. So far, this has happened 2 times. First in 2013 and the most recently this year in 2022. So taper tantrum remains a very big challenge. Okay, America, I've already mentioned this in the introductory part, that America or USA increased its interest rates by almost 425 basis points, means its interest rates were 0.25% and it increased the interest rates to 4.5% within a span of 6 months. As a result, from world over, the money went to USA. We have already talked about it a few times, so I hope you understand. This leads to depreciation in all other currencies. This is also a major global challenge. Okay. And the most recent crisis the world has experienced was the COVID pandemic. Because of the lockdown, the economies were closed down, they could not perform, and they were performing well below their expectation level. Okay. So that was the major challenges or the history of the economic crisis in the last century. Now let us talk about the chapter number 1 and the datas there in another video. Thank you.